Hey guys, I am Grady from Grady on the Charts, and it's been really rough for me lately. Not gonna lie. Financially, everything has kind of really been a struggle. In the markets, everything has really been kind of been a struggle. Today, I wanted to get in, and I really wanted to keep my trading psychology under control. I really wanted to keep my discipline intact. I did that, but I want to give myself probably a C plus on keeping my discipline intact. Um, I took a few trades pre-market. I missed a really great entry that probably would have been it for the day. And I tried to re-enter a couple more times. So I had three pre-market trades. And then right on the at the open, I attempted to re-enter the market. I opened up my stop loss and I got stopped out. And I just want you guys to take a look at that really quick. Stick with it. You got to stay on. You got to stay in there and all that sort of stuff. But um, find that if you need to deal with life or you need to deal with other things and you need to step away from the charts, it's just one of those things that has to be done. It just has to be done sometimes. I wonder if we're gonna hit the consequent encroachment of this gap before we go. I opened up my stop loss below, giving some breathing room. So yeah, so basically, every once in a while, our accounts have started to bleed, and in order for us to survive these markets, we have to step back and kind of be honest with ourselves about what we're experiencing. This has been a tough year for me. Um, I think it's been a tough year for everybody. Not as tough as it is for some, though. Our thoughts and prayers go out to everyone involved in the current conflicts around the world. We wake up in the morning, we want to make a little bit of money in the market, and we're thankful for being able to do that. But it could be a lot worse. It could be a lot worse because it's right now it's quiet outside my house. I hear cars and people going about their daily lives, doing their daily thing. And it's one of those quiet blessings that, sometimes we take for granted. We take those things for granted. And we try to do our best and be our best and provide for our families. And that's hard enough, right? So back to my small problems here in the financial markets. Trying to get myself aligned with the markets, getting myself on side with it, trying to keep my composure and keep my mental and emotional state together. That's been a struggle for me lately, because really, I see myself as just about break even, and that's probably an overestimation of my abilities or of where I really am in the market. Um, yeah, it's probably an overestimation. I'm probably not quite break even. It's just that on certain days I experience a nice amount of success, the type of success that I dreamed about when I first started trading. And I'll experience that type of success. And then there are days when, I'm trying to um what's the word? I'm trying to um can't think of the word, but I am trying to not regulate, not consolidate. I'm trying to um reconcile. Right. I'm trying to reconcile my experience, thinking that once I broke through a certain level of success, that I would form a minimal level of success. And when that's I'm assuming that there's a certain level of truth to that. However, when your minimal level of success and your maximum level of failure are in equivalence, it's a real mental and emotional struggle that the more seasoned and mature traders tell us about. We're always talking about, like, be aware of your emotional and mental state, whether it's overconfidence or underconfidence, whether it's the idea that, look, whatever happens, right? Sometimes we can just get to the point where we go beyond revenge trading, and we go beyond being tilted almost to this sort of a numb spray and pray personality, or spray and pray strategy. So excuse me. So I was just saying all that to say, took a break from the markets to try to get my emotions in check, and to really share the truth about my personal experience. I want to tell you something that I think that for newer traders that we have to be careful of. We have to be careful of our gurus. And I don't mean our personal gurus as if, I'm saying that your personal guru. I say, meaning you have to be careful of your perspective, your perspective of how you interact with them, because they're people, they're regular people, right? They're regular people, and they say things that they are trying to convey that they wish someone had said to them, that they finally got, right? And when sometimes when you finally get something, it's like, my bad, sorry about that. It's one of those things where you'll tell yourself, after a while, take the profit, idiot, or or um or or one of the ones that I think that many new traders are very sensitive about. Oh, trading in a simulator, right? Oh, you're trading a prop account, right? Oh, I'm trading real funds, right? And I understand what they are getting at, because what they're getting at is they're getting at each other, right? And what I mean by each other is there are certain people who have certain, levels of experience, certain years in the market. They're not new to trading. Dang it. That was my stop loss. I mean, we might very well be in a consolidation, because I was under a very strong impression from the pre-market that we ran to this high. We took out the London session high. We dropped back in. We popped back up. We ran back in below the middle, the consequent encroachment of London. We popped up, traded back in. Then we rose, traded up, traded down, dropped back in. Man, we've been consolidating all pre-market. All right, so this is the 7 a.m. price. We rose, we dropped back in. This level takes out the Asian session and the London session. Then we rally, we drop back in. This is a quarter level of the total Asian session here, pre-market. we pop up to the high, almost near the high of the Asian session and London session here, and then we drop back in. So yeah, kind of got chopped up through that all day long today. So as you can see, the market was really choppy at the open. It really had been kind of in a consolidation pattern since the pre-market news. The market ended up going in my direction, but after a significant pullback against me. So what I'm going to need to work on now is just discipline, right? I'm really just going to have to just stay out of the market for a minute. Let price go to where it's going to go. Um go back to the drawing board, get my head right, get my discipline together, and hold on for a better opportunity tomorrow. Um So I hope you guys like this video, right? Like this video. It's very I hope you guys like this video because well, actually that's what I want to say. But actually what I'm going to say is that type of emotional outburst is really the basis of revenge trading. So many of our problems that we have in trading are not based around the market itself, but they're based around the uncomfortable situations and feelings that we find ourselves in every day. Accept those things. Accept that discomfort. Accept what it's like to see the market going in your direction when you're not a part of it. And know that eventually you'll have the type of self control that it takes to stay out until it's time. Get in when it is time and enjoy the fruits of your hard work. Hey guys, what's going on? Hi, I am Grady from Grady on the Charts. Welcome back. I know it's been a while since I posted a video, and I just wanted to do a quick review of today's trading price action. All right, so today started out pretty slow. We were in a bit of a consolidation. I traded a little bit pre-market. I got chopped up in the range, the area that I was targeting. We finally traded back to. I got stopped out, and that was it for today. I wanted to work on reducing the number of trades that I took. The first three trades had very narrow, very tight stop losses. I opened up my stop loss on my fourth trade of the day. It went against me, so that's going to be it Should go. Should work. Hey guys. Hey traders. Um, I think I should put this up on the screen like this. Shift F. No, I don't want to see that. No, I'm not taking another trade. Thank you. Settings, executions. Okay. I hope that's clear. I hope that's clear. Excuse me. So we rallied here, right? Rallied here, broke back in, broke down, traded back up. So there's high, lower high, then there's higher high here. And we take that out. And it's just as we're taking these highs repetitively, my thought process is that we wouldn't drop back in here. We created this imbalance. We had this sort of an imbalance here, right? Take that, pull that forward. I wanted to see us drop into this imbalance, wick into this down close candle, and then move higher. But we didn't. We wicked, popped up, and then slammed down. Um, okay. So, hmm, probably should do this real quick. All right. Hey guys, I'm Grady from Grady on the Charts. Welcome back. Hope you guys enjoyed this video. I hope you like and subscribe, and I hope to see you live on the markets at 8:25 a.m. Central Time. I guess that's right. I hope to see you guys here at live 8:25 Central Time. What I wanted to talk to you about today was just being careful with your emotional state. Now, one of the things that I think that we all go through, but we really haven't acknowledged it, is listening to our internet gurus, right? Listening to our internet gurus. I'm not talking about your personal mentors. I'm not talking about the people who explain your strategies to you. I'm talking about the back and forth that traders have that's not trading based. It's more like the trading gang wars, if that makes sense, right? So there are trading gangs, right? So it doesn't matter if it's orb or if it's price action, if it's market strategy. And the reason I say that, and it doesn't matter if it's any one of those strategies. Let me be clear. We often hear the back and forth between the different camps to talk about what's a good strategy, what's trash, and what's not trash. Now, there are probabilities and there are strategies that have a higher probability and a higher level of accuracy, right? And for any one of the strategies, there's going to be rules and regulations for each one of them. Now, the traders that obey and abide by these rules and regulations naturally find a personal and emotional attachment to these strategies that go beyond what that could possibly mean for you, right? They traded this strategy and this strategy paid their bills. They traded this strategy and this strategy got them out of debt. They traded a strategy and this strategy changed their life. They're living the life of their dreams or whatever the case may be. Or they found this strategy and they're hoping that this strategy does this for them, right? They're hoping that it gets them out of debt. They're hoping that it pays their bills. They're hoping that it makes them an internet, YouTube's, social media phenom. And they begin to harbor a certain sort of a relationship with these strategies. I'm no different. I'm not saying that I'm different. What I'm saying is that we'll often hear very harsh um, assessments and comments, not necessarily about strategies, but about the people who hold dear to these strategies. Now, for you, you're taking you're taking your hard-earned money from your 9 to 5 job, right? The little bit of disposable income that you have to put toward this dream. You have never made 20 grand in a month ever. You have never driven an exotic foreign car. You've never traveled the entire world. You're like me, right? You're not are we're practically in the same boat. Now, the difference is that the people who claim that they have will levy these harsh criticisms toward the upper echelon of traders. No, they really don't. A lot of the times they're making these types of statements that really only affect the beginner trader. Why? Because the upper echelon traders have proven statistics, proven data, proven track records of their success. So lobbing these claims back and forth at each other are hilarious to them, right? Those traders also, if they trade, also have these large communities of people who buy into their communities in order to get their trade signals. That's different than what you're probably trying to do. What you're probably trying to do is you're probably trying to make consistent trades on a daily basis to make a consistent profit. So in the long term, you could have that type of outcome. But you're not going to have that type of outcome. But for traders who trade, this is my personal experience, my personal belief. I'm not gonna say experience. I'm saying belief because there's certain elements of it that I haven't experienced yet. Is that for the traders, it's a very slow, thorough, monotonous process with these breakout days, with these breakout moments, but then it goes back to more of a standard operating procedure. For the gurus who have communities, what they have is they have a monthly influx of um would hate to call it unearned capital, but of profit of revenue. They have a revenue stream from offering courses and offering all of these types of avenues for people to learn their strategies. That puts them into a different mindset and a different category, which means that when they can trade certain size, they can trade for certain margins, and then they can sit back and look at other people and critique, right? Oh no, that's not good. Oh yeah, that is good. Oh yeah, that's not good. Okay, oh yeah, this is great. This is wonderful. Oh yeah, this is the best. This is not the best. Um, so be careful when you guys are listening to or going through your social media stream because I go through my social media stream all the time because what I'm looking for oftentimes is just that sort of confirmation of my journey, right? My journey confirmation. And I'm sure a lot of you guys are looking for your journey confirmation, right? Am I doing this right? Look at this rally. This is exactly what I was targeting. But am I doing this right, right? Am I thinking right? Am I moving right? Is everything going right? And that's the reason many people get into communities and they buy into communities. However, your mentor and their aggressiveness towards new traders and traders who make mistakes can often be as destructive as it could be supportive. So just be careful of that. And I didn't want to kind of overemphasize that, but I just find that to be a recurring pattern that if people want to make a name for themselves, they have to target somebody else. They have to target a group. They have to belittle certain activities and actions, which is good because you really want to protect people to say, look, listen to this and don't listen to that. But at the same time, you're wondering why it is that your confidence in trading. That was the move I was looking for. It's popping up here now, and I could not catch it. And yeah, but this is one of those things that gets you in the gut. So just be careful of that. Be careful of your uh because and again, this has nothing to do with them. This has everything to do with you. Because in 5, 10 years, I might be saying the exact same thing that they're saying. But what I'm saying now is for us at this level, we have to be careful that an aggressive coach is not misinterpreted to break down your mental trading game. Does that make sense? So all I'm saying is be careful. Right? I'm saying be careful. I'm saying if there's anything great from them that you could take. Okay, let me do this real quick. Cut that out of the video. Is there something, if there's something great from them that you can take, number one, be a diligent student of what they are telling you, not of what they do, if that makes sense. And you'll find that in a lot of disciplines, right? Because everybody is trading their own chart. So when you take your trade, and it doesn't matter if you're taking, if you're copy trading, if you're copying somebody else's trade, if you're taking that trade, you're taking that trade. So that's what I'm saying about your your mental trading game. If you're telling yourself the only way I can be successful is I have to copy trade somebody else, I have to be there watching them trade, taking the trades that they're taking, then you're missing the most important part of the mental strategy, right? Of the mental trading strategy. Number two, if their commentary becomes a source of ego attack. Are we in consolidation here? If their commentation becomes commentary becomes uh, a level of your spiritual support, I think that's what I want to say. Then you have to be careful of that because we're trying to lean on our own understanding when it comes to trading. So I'm not saying abandon your gurus. I'm not saying abandon your favorite YouTube or Instagram or TikTok or whatever, because I'm on there too, right? I'm on YouTube, I'm on Instagram, I'm on TikTok, I'm all these places too, and I'm making my social media posts as well. It's just that I find that new people to this space have to endure the initiation, right, by the people in this community. There's an initiation, and the initiation is you have to have a thick skin. So I'm just relaying that to you. Have a thick skin, right? Be able to take your lumps like the best of them. Be able to get back up on your own feet, and every day work to trade your own chart, to trade your own accounts. Work to abandon eventually all of these mentorships where you would have to um, log in every day when they log in, or you wouldn't be able to take a trade. All right. At some point, if they're a good teacher, shouldn't you be able to shouldn't you be able to say, okay, thank you, right? If I taught you how to trade a tire, I say change a tire. At some point, you would not call me to change your tire. I want to say trade so bad. If I taught you how to change a tire, you would not call me 3 years down the line and say, "Hey, let me change my tire." Right? That's the move. That's the move. It's the move I was looking for. But the volatility is wild. If we could take a look at this range from the side of this low, and then as we're popping back in, the volatility is all over the place. It's not. There's no guarantee that I would have been able to that even here. I like this better. I think once we drop back into this gap and we moved up, made it back into this range, moved up. I was early, right? I was expecting to see this level hold because of all of this price action here, but it didn't give it to me this time. All right, so that's going to be it for today. I'm going to go ahead and shut this trade down. Hey guys, if you like this video, please like, subscribe, and stick around for the better part of trading from Grady on the charts. It's been quite a journey. It's been quite a journey, quite a learning experience. If you guys are interested in getting into trading, find yourself a good teacher, find yourself a good mentor. There are a lot of great strategies out there. Me personally, I enjoy trading ICT. A lot of people say that it is complex, and I think that a lot of people say that it's the same as the other things. And for me personally, I don't see any other strategy to, point to a particular area, excuse me, to target for entry. There's like if it moves up, most strategies say that you look at a particular range, and as it moves above this range, then you take your entry and you give it a massive stop, you give it a massive stop loss, and you wait. And I think that for most levels, if they're a reasonable level, if you give it a wide enough stop loss, then you should be good, right? But I think that that's the difference. That's the significant difference between ICT and other strategies is that he gives you an area where that strategy gives you an area where you can have a very narrow stop loss. Excuse me. You can have a much more narrow stop loss. Um, and that helps preserve your account, right? Because especially on some of these strategies, if I looked at this range and I'm watching for us to move outside of this range, problem with that is that my stop loss is 50% of this overall range. But that's a massive stop loss. That's a lot of equity to give up to right? So if you have a large account, right, where that type of drawdown doesn't matter to you, then yeah, I would see why something like that might work. But for the rest of us, we're looking for something that says, look at sort of a small range right here and give yourself halfway between here and the low of that down close candle on the 1 minute. That's a much more narrow range if you think about it. But it's not to downplay the effectiveness of it because ultimately, if we're trending in this particular direction and we broke down and we took out this low and then we moved back above this high and then we traded back in, there is probably about a 70%. This is the trade I was looking for, right? Here, here. I think my stop loss was here, right? That's kind of what I was looking for. But one of the things that it's still getting me is this imbalance. Not the first time, the second time. I feel like I'm this close. I feel like I'm this close. Right now, I am practically break even. No, my accounts are still bleeding right now. And if you guys are in that situation, I hope you guys can work that out for yourselves. And keep studying, be disciplined, be diligent, and um, yeah, good luck. Again, hey, if you guys like this video, please like and subscribe, and we'll see you again. I'm Grady on the charts. Bye bye.